In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boy CryptoKeeper here for TA Thursday, and we've got some big names in the house. We've got your boy Gareth Soloway. Gareth, how you doing, brother?
I'm doing great. How are you?
I'm glad you're here, brother. Thank you for being here as always. And then we got a weekly little session going on with Magic Internet Money. Magic, how you doing, brother?
Oh man, I'm doing great.
And we've got a special first-time guest for TA Thursday. We got your boy Crypto Zombie. Zombie, how are you, brother?
Really awesome, awesome to be here, guys. Thanks for letting me on the show.
I am super excited about it. And as many of you probably know, the markets have been moving. So we're going to dive into what is going on there. Why are they moving? We're going to talk macro conditions. We're going to talk charts as always. And we're going to get the lowdown as to what these fine gentlemen think is happening in these markets and where it's headed short term, long term, and everywhere in between. Real quick, just if you're in a mobile, just make sure to X out of the live chat, smash the like real quick. If you're on the computer, obviously, just push the button. It's not that tough. We'd appreciate that. And then if you're not involved with Danger Close Alpha, I just want to take a brief second. So dangerclosealpha.com, okay, that's why I'm wearing the goofy vest. If you're new to the stream, we're going to be giving away a fire starter today. If we're able to, over the course of today, mint 50 of our commodities. We've got bullets, beans, and bourbon. They're 0.01 each. And ultimately, you'd have an opportunity to win 5 Ethereum by purchasing one of those. I don't know where else you can spend 0.01 with the opportunity to win 5 ETH, but hey. So dangerclosealpha.com if you want to check that out. Let's take a look at the markets, and then we'll dive into the charts a little bit. So we've got the global crypto market cap at 906. Look, we passed 900. We're headed in the right direction. 906.04 billion with the B dollars. That's up 5.23%. Bitcoin pressing towards 19K. It's up 7.57% today at 18,866. ETH, my girl, $1,426, up about 6.25. And then we've got XRP, baby, not really moving, but it's up 10% on the week. XRP fam, put them up. Drop a 1 in the chat if you're part of the family. I know I always get a lot of love on that one. Cardano up 4%, Dogecoin, and then rounded out the top 10, we've got Polygon Matic at about 5%. So markets are pumping. Everybody's excited, but should we be? I guess that's the ultimate question that I want to know. Should we be, or is this just going to be a little bit of fun for a little bit of time? And as you know, if you followed Gareth Soloway, and obviously give a follow to everybody on here, but if you followed Gareth for any amount of time, this man has been right about a lot of calls in the past. So Gareth, tell me what you're seeing in the markets, brother.
Yeah, so a beautiful little move here. And again, this is something that usually happens, and I'll share my screen here. But one of the things that I do in the stock trading game is always look for January effect plays. And basically what happens in January is anyone who was going to sell an asset to take a tax loss or offset gains does that in December, right? So once you get to January, it takes a lot of the selling pressure away from assets, and that includes stocks and cryptocurrencies. And so I think going into January, I was kind of expecting this little bounce here. Again, I say little because Bitcoin, again, 16,000 to 18,800, not the biggest move in history of Bitcoin. But to me right now, it still hasn't proved itself, right? So it's a great move. You can see this downsloping trend line right here. We finally broke above it. That kind of kick-started the rally in early January. We're now kind of kissing this little underbelly of this chop here. For me, the biggest thing that I'm paying attention to is this fall, right? So you had this big fall, which was the FTX collapse. That would be the only way for me to really start to get semi-bullish on Bitcoin is if we were to eclipse that high.
To pull back the same way we came, you're saying to just go right past it where we came down from.
And that's a very psychological thing, right? So you've had so many people damaged by FTX. The whole crypto space, you could argue, got damaged by FTX. And so if price were to trade above that, psychologically, that would be a big relief to investors, and I think that would draw in a lot of new money. So right now, I look at this as a bear market rally. It's still inside of that move. Just to do one thing here that's kind of cool, we'll do a parallel trend line. And if we stretch this line here and then stretch it up, look at that. See this high right here, and then look at where we just kissed right there. And so this is stuck inside of what we would consider a bear flag or in spirit of bear flag. So yeah, at least at this point, I'm in the position of thinking that It's a great move, but I would recommend for myself selling into this up move.
Awesome. So I love hearing what people are doing themselves. You're talking about, hey, I'm looking to sell into this up move. Zombie, I know you do a lot of trading yourself. Talk to me about what you see. I know you had some technical issues on the back end with pulling up some of the charts. So talk to me about what you're seeing. You think you got it?
I could try to see if I could do it real quick. If I can't,
Okay.
I'm not gonna just see if we can do it real quick. If not,
Yeah,
then
no
we're all
worries,
good.
dude. No worries.
Yeah, it's not letting me do it. It's not letting me do it, guys.
Well, then
I'm sorry.
talk to me about what you're talking to me about what you're seeing and what you're doing personally as it relates to the markets right now.
Well, as I said, I did have a lot of charts I wanted to show. I can't really pull them up right now, but I wanted to talk about, or at least what I had noticed was on the DXY, there was actually a death cross, and I like I said, I wish I could show it to you right now, but we had basically the 50 moving average moving below the 200 on the simple daily. And ultimately, if you actually go back in history, every single time dating back to 2013 that we had that, Bitcoin actually had a rally. It either led it into the rally or it was mid rally and continued to rally. So I don't know if anybody else had pointed that out, but I mentioned that over the weekend and I said, hey, there's a good chance that we're going to get some type of a bear market rally pump. Now, the areas that I had been looking at was between around 18,160 and let's see, 18,437. I was actually a little bit shocked to find out how fast and how hard we pumped today, although it had something to do with Miss El Salvador. I don't know if you saw that. She had the Bitcoin. She was wearing like a Bitcoin.
I didn't see that.
The Miss Universe pageant, Miss El Salvador. She actually had like a Bitcoin like little lollipop thing she was holding, and she was all decked out in gold and stuff. I swear, I'm not making it up.
That's great.
So maybe she was responsible for it. But I mean, if Gareth, I saw he had some of those similar trend lines, and I noticed that if you kind of take that pop that we had back on, it was September 13th, and you draw up, a downward sloping horizontal. Again, I'd love to be able to be showing you this. It kind of is calling for the fact that we've been rallying like a little bit too much. So I did tell everybody for my position, I actually sold a little bit too early. I should have held on a little bit longer. But once we got in that pocket, around 18,216 roughly was my average. That's kind of where I exited my position.
Yeah.
Because I mean, it is pretty overextended right now in my opinion. But yeah, I mean, personally, like I said, if you really don't want to rally too fast, too hard, because we've seen in the past when Bitcoin has done that. For example, when we were coming out of the bear market of 2019, we had that crazy rally up to $14,000 back in June of 2019. Yeah. And in my opinion, it happened just a little bit too quick. So the way that I'm trying to explain it to people right now, and this is ignoring all the macro, this is just like the charts and just looking at the prices, I would rather chop sideways, kind of in a range for the rest of this year. I know that's not what people want to hear, versus have some crazy, blow off rally where we go up to like 33 or something crazy fast, because then I think we're going to get what we had back in 2018, 2019, 2020, where you're actually going to have an even longer bear market, because you kind of pump too fast. You know what I mean? Yeah. So I'm actually okay if we stay, in this range for this year. I have no problem with that. I think that's super healthy.
Okay.
So
I think that, I'm prepared for that. A lot of people that if you're somebody that's newer to these markets, if you just got it in the last year or two, just be prepared. It's going to feel like a freaking eternity. At least it did for me. I don't know about everybody else here, but it feels as if it's an eternity. And for me, what I had to start doing was stop paying attention. And this is just kind of a little aside. I had to stop paying attention to the overall value of my HODL portfolio, because I continued to look at it and I know what it was at its all-time high. And I'm such that, I'm thinking that all-time high, when I get to a new all-time high, that's my new zero, baby. Like we're going farther and farther from there. And so it kind of gets in your head a little bit. And so I just want to let everybody know, be prepared for whether we get some moves or not. The reality is it would be unprecedented for us to see a move upward and continue moving towards all-time highs. But I'll be interested to see, if we do get any sort of big moves or not. I know a lot of the guys that are good in the trading game, like we have you gentlemen on here today, will take advantage of that. And speaking of that, Magic, what are you seeing right now? I know we've got two of the three, two. Well, I'm not showing charts right now, but both Zombie and Gareth are both saying, hey, listen, I'm paying attention and kind of selling or at least looking to sell into this rally. Are you thinking the same thing?
Just to clarify, I don't want everybody to think I sold my whole position. I never do that. I have a hodl position I hold all the time. I don't care what the price is, but I do a mixture of leverage and swing, and I had a big swing position open from the lower 16s that I just closed out. So I don't want people to think I'm just walking away before we go to Magic. Sorry, buddy.
So for the short term, just to clarify, for the short term, what Zombie's saying is he was getting out of one of his positions, not his entire obviously position as it relates to Bitcoin. So short term, what are you thinking? What are you thinking, Magic? Let's start with that.
So very, very similar target to Gareth. He stole my channel, my parallel channel there.
And maybe he got it from you. You know what I mean?
No,
he woke up early this morning,
he
watched the show, stole your numbers. What a guy!
No, we talked about this last week. So I have a folder I call the fun folder, and that's where I put all the fun ideas, right? And this was one of the ideas we've been talking about for a few weeks. Was when you were coming into this, you had a couple different options. You had 2 breaker levels on the weekly time frame, and we'll show you that kind of right here on the weekly, right? So all you were looking for was a change of behavior above this local high at 17,174 or the local low at 16,611, right? So you can see how price was not closing below these levels or above them, okay? You actually came down and did close below 16,611, but on a really insignificant time scale. So it gave you a great entry on the failure to move lower to the bottom of the range. So once you broke back above, you had good buying imbalances. You had things that were supporting that the move was going to come into play for potential upside. And from there, all you're doing is timing it. So you can turn on like an AB equals CD. This would be the timing. And so what we're doing is I'll build this with you guys so that you can follow along and you're not just seeing me put things on there. It's a symmetrical move essentially. And all you're looking to do is just like Gareth had up there is some form of a channel like so, and you're coming into the highs. Now, when you're timing something like this, you just want to see the 1-to-1 between A to C, right? And then you want to see again, the 1-to-1 between A to C here. Right. So you're looking to time this 2 times and give you like a little zone so that you're not actually putting all your eggs in one day right here. And so that gives us our box, and it's leading you up to a macro golden pocket. Now you're also back testing an old range. So when you're coming into this level, what's important to note about back testing an old range is generally you're going to back test the point of control, not just the value area low. Now this is the time point of control right here, meaning that this is the exact price that we spent the most amount of time at in this entire range right here, where we spent almost 6 months. So to that point, it makes sense to return to this level. If there's resistance there, it's a great place to be locking in profits. Just like Zombie, I have not closed all that position. I'm half out of that position at this point. It's a full 100% return on it. I'm very happy with that. I've closed that position back into spot, the part that I did take profits on. The rest of it will remain open, and I'll let price force me out of that trade because I have long or shorts from up higher. I'm not interested in any more swing shorts from these levels. That doesn't mean you can't. It's just one of those things where, to me, I think that the greater potential is still to the upside, because when we were timing out the range up here, you actually got quite a reversal on the 24th, and it went for about 2 months. And so if you were looking for something similar, obviously you have to have your invalidations. It would suggest that we still have some magnetism to the upside to backfill some of these averages from the prior year. And to me, I'd be looking at that just like Gareth said, you have to reclaim this high right here. Otherwise, it's kind of a moot point. And it does all start with this 19,150 level. But if you start living above this local POC area around 19,150, start challenging into this 20 to 21K area and not seeing that rejection, I really think that you have the potential to take all of these highs in this range and run it to about $26,000. So for me, it's one of those things where I look at that trade and I say, okay, the risk to reward is fantastic based on the positioning I've gotten. I'm willing to let this trade run. I'm not going to leave myself all eggs in one basket. I am going to take profits like I've done to make sure that I get paid at the end of the day. But I just see that as the greater play. Now, if it rolls back over, I'm still short from up here last year in the spring. So it doesn't affect me. To me, it's a much easier way to trade because you've positioned accordingly. But that's how I traded this, was a really simple AB equals CD into TPO POC right here. It's the gold pocket locally, and timing wise, you're reaching it on an exact 1-to-1 in both time and price extension. So it just kind of, everything comes together, and it's all technical analysis. Like I missed all of the CPI information this morning because I was doing an interview with someone about NFTs and Web3. And that's totally fine because you just trade the charts. At that point, you're just like, you just go to the charts and you let them dictate what's going on. And there was never a moment that said, get out of your long going up here. And we were all watching the order flow, looking for that weakness. And it just never came. You'd never had, buyers getting trapped at the top and sellers coming in to make sure that they could push the price lower, things like that. So it was just one of those things where, you just I don't know. You just long and chill, you know, and hang out, take
Long and
profits.
chill, baby. Don't diddle
You
in
know,
the middle,
for
right?
right now. But I mean, this isn't a place to buy. I will say that. Not a great place to be buying. I do want to highlight that. I'm not advocating like opening a long right here. But, you know, if you were getting in down here in these regions, yeah, definitely leave some of this to run. And if you feel like price is breaking down, you want to head short, that's all on you guys. But the last thing I'll leave you with is that I've got one dashed line here. And so we just talked about the last 6 months. Right. In the last 6 months, what were we doing? We made a low basically from June 30th to December 31st. Right. This came in on like June 12th, but the majority of this range is in that 6 month time frame. So this is the average of price from the last 6 months. So we just went back up and touched the exact average of price from all of this price action. That's all you've done. This is a mean reversion play as of right now. You start getting above the average of price. It means that people are now interested in the price above the average, meaning you can auction that price higher and we can hit some of these higher targets, but not until then. So that's where I'll leave it at. Otherwise, I'll just keep rambling.
No, you're definitely not rambling, brother. I appreciate that. I want to take a quick second. If you're not putting your funds on a hardware wallet, you should be. And my daughter Addison wants to come on and say hello to everybody. Say hi to everybody. Say, get your hardware wallets. The link's down below the stream. Mwah. I love you. I hope your nap was good. All right, that's my beautiful 19-month-old daughter. She likes to come in and say hi when daddy's streaming. So we always gotta do that. But we do have a link down below the stream if you're looking for a ledger for a hardware wallet. Okay. So moving forward, Gareth, I want to talk to you real quick. I know one of the things that you do a lot and pay attention to a lot is you do pay attention to the stock market. You do pay attention to the Dixie. You do pay attention to things like that. So talk to me about what we found out today with the CPI data.
Yeah, so I mean, CPI basically came in alignment with expectations, and so the market was really weird. Initially, it dumped out, and then it reversed on the S&P, and then we've kind of been just chopping around slightly positive the entire day. And I think the takeaway is, yes, inflation came down; it was in line with expectations. But the reason why we're not seeing either a big up day or the big down day is because I don't think it changes anything. You know, the Fed is still going to hike rates the next time they meet, probably 25 basis points. And there's still kind of a lot of question marks for the stock market right now about earnings, right? And so we know the economy is starting to slow a little bit. A lot of, analysts are saying that earnings revisions have to come down. They have to come down, which then is negative for the stock market as valuations apparently are still too high. And so, it's an interesting situation where the S&P is up today. Crypto's up today. We've seen a 4-day run up on the stock market. Basically, that coincides with the run up on crypto. So you are seeing this continued kind of connection with risk assets going up together. And really, to be honest, that's my biggest fear for crypto. I think that the FTX scenario is kind of hopefully the worst is over now type scenario where we don't see anything as big as FTX coming forth. But now it's more of, okay, well, if the stock market declines, do people panic and sell their crypto anyways? And that what drives it down. So that's kind of what I'm looking at this point. I mean, the stock market to me is hanging on by a thread. Just to show my chart real quick on the S&P 500. Sure. Take a look here. So look at what we've done. So you had this drop, which was right off this trend line. And then look today, we filled a gap and we went right to that line. And this is, again, a bigger downtrend trend line. On the S&P 500. So I'm in the position where I'm actually short the S&P 500. I'm not short crypto. I want to be clear on that. Anytime something falls 70% from its highs, you're not going to catch me shorting at the lows anymore. Just like you shouldn't have been buying Bitcoin at 65,000 at the highs. But it's more of staying away and maybe taking profits on some of these moves in crypto. Because you're worried about the stock market having another big rollover to it. So that's my expectation. I think the S&P is going to be down 25% in 2023. I think crypto will drop probably towards 9,000 before it's all said and done. But then by end of year, probably recover towards 20 again. So I think there's going to be this changeover where you go from a risk asset being crypto to where it becomes a store of safety in the second half of the year once we get that transparency, hopefully from regulation.
Yeah. And, one of the things that we've learned over the years is in the short time that, Bitcoin's been around and other assets in the crypto space is that it really still is tied to the hip of the stock market. So Zombie, I know that you pay attention to all things finances as well. How do you see how do you see our macro world conditions right now? One of the things that we talk about a lot with, with our NFT project with Danger Close Alpha is like being prepared for the future, right? And so what I want to know from you is, how are you preparing for this upcoming year as it relates to financials? Are you heavily into cash? Are you staying heavy into crypto? Are you trading more? Are you trading less? Kind of macro. Talk to me about what you personally are doing, because you've been really successful over the years in the crypto space specifically.
Well, I attribute my first few years to luck, so don't give me too much credit on that. I was obsessed. I was obsessed with the Bitcoin narrative, and I did what no one should do. The house went into foreclosure, sold everything, had like $5 in the bank account, and that was in 2017. Obviously, then watched it all go back down again. So yeah, I mean, I used to be the guy that said, screw cash, screw a hodl position, I don't care, libertarian style, Now, no, I do have a cash position. I still do have a pretty large Bitcoin position. I will be totally honest with you. As opposed to somebody who I assume, like, for example, Gareth, you're probably a lot less exposed to Bitcoin. I'm very exposed to Bitcoin, but I've had enough cash position on the side where, pretty much I'm looking, if we don't do anything this year, if we have even, a mild 2024 and we don't see anything crazy until the end of 2024, 2025, I'm positioned in a place where I'm fine. I don't need any of this money. It's okay. And for me, I actually get sad when I see my Bitcoin amount go down. I've gotten so desensitized, I guess, to just seeing the dollar amount over the years that it really doesn't matter to me, because I can't, I guess you could technically spend that kind of money, but I'm not a person that really cares about stuff like that. Like, I've made money over the years, but I still just like hanging out with friends. I'm not really big into all this fancy stuff. So for me, when it comes to that whole preparedness, thing, I don't believe that, the dollar will remain as strong as they say. And I do believe that inevitably there will be a pivot and it will continue to decline and fall, because the whole system is based on debt inevitably. And, once you do your research in Bitcoin, you do understand that it is the hardest form of money that planet Earth has ever seen. So I sleep better at night knowing that I have more Bitcoin today than I did yesterday, even if the dollar amount is down for now. I mean, yeah, I'll play their game with cash in the meantime, but I'm not sitting on a stack of cash for the rest of my life. You know what I'm saying? I have no interest in something like that. So, for me right now, it is kind of a game of dollar cost averaging, but at the same time, yeah, I mean, if I can swing, trade, like right now, my cash position, I just sold out. Yeah, I am anticipating I would anticipate a pullback at this level, because I can't pull my screen up right now. But even if you take the chart all the way back to where we had this massive pump in 2020, we had this consolidation November and December of 2020. And if you actually draw a line across, you can see that after we had that Terra Luna, the Terra Luna was I think it was more of the Celsius one. We started to consolidate around that, previous all-time high 20K level. So for me, the way that I look at it is, if you're not day trading, then it's basically just an excellent. I mean, I think anything below 20K, you're basically getting Bitcoin on discount for what people were buying 5 years ago. Yep. You know what I mean? So in my opinion, don't do what I did. It worked out for me. But yeah, I mean, I will never sell my full Bitcoin position, probably ever, just because, for example, Gareth, you were talking about the CPI, right? Mm-hmm. So the CPI comes out and they're like, oh, great, inflation's going down. It was at 9, now it's at 6.5. It's like, yeah, but understand that still represents a percentage increase. And if you look at what we did last December versus this December, I mean, we're still up the highest we've been in 40 years. People are cheering, we're down, but it's still the highest it's been in 40 years. So we're not in a good position. You know what I mean? So it's you got to hedge in both ways. Have your cash, but also, in my opinion, have your Bitcoin as well. Yeah,
I laugh at that as well, because the CPI data, first of all, I talk about it a lot. I think it's a skewed data to throw at people. I think it's a piece of data that they can rub your shoulders a little bit with, because they leave energy out of it. They leave food out of it. They leave things that you and I use and need every single day. So I think that, just from a standpoint, it's very government of them, right? Just give us some information that, works good for the narrative, and we'll just leave it at that. Right.
It's probably closer to 20%. Honestly,
that's exactly what I was getting ready to say.
Every time the data becomes something that they don't like, they change the definition. Like, they change the definition of a recession. They you know what I'm saying? They just make up their own rules. So why even,
Yeah. No, I'm 100% with you. And I think that anyone that's been to the store recently and bought, I saw a funny meme and it said, hey, good news this year. We're going to be, what did they say? We're going to be coloring rocks instead of eggs because they're too damn expensive to buy and color for the kids during Easter. You know, my wife told me that we bought a dozen eggs the other day for like $8. And I was like, excuse me? Or it might've been 18, but whatever. It was a wild number. I do like my organic eggs, but still, it's not the point. It's crazy. And so with the macro, I believe that we're in a recession. Magic, I'd like to hear from you, knowing the recession type area that we're in. Is there a specific way that you do or don't trade because of that macro market conditions?
Kind of. You kind of know my position on this. I think that if we're going to get the lower valuations that come later in the year, I remain hedged short as just to protect myself and my capital, because I am exposed in assets, and I think it would be for me. I'm not willing to take the drawdown. So yeah, hedge short, and I am willing to start hedging long because I don't want to miss out on opportunities by any means, you know, because I am a trader. But in terms of, you know, those longs, it's not something I'm willing to marry and be be hard-headed about. I think that stubbornness is the most foolish way to lose money in this market, is not admitting when you're wrong. And that's a tough thing for a lot of people because we're all going to be wrong. I'm going to be wrong this year at some point. I guarantee it. Yep. And it's one of those things where positioning is when that starts to matter. If you take good positions and you moderate the risk, especially if you can do that, you'll be just fine. You know, you'll get through this and you'll have some capital ideally to get in at the bottom, you know, as long as you're patient, things like that. But am I doing anything else? I mean, I buy gold and silver. My parents have been doing that since I was a kid. They've been giving me that stuff like as gifts on my birthday and my kids' birthdays for a long time. It's
actual
like
physical or derivative?
Yeah, oh, yeah, physical gold and silver. That's I
okay.
always used to think it was really silly because, you know, that's back when like gold was like $300 an ounce. And I thought my dad was like this conspiracy theorist. And so he's been doing that since I was in high school, man. Like same with my mom.
Super dope.
Yeah. So it's one of those things where I try to stay diversified, try to stay hedged against the market if I can in this time. Yeah. And I'm really not too eager to change my stance on it. You know, I would love to. I think it's more fun when the market's pumping, of course, like everybody's happier for sure. Yeah. But you know, I think patience is going to be a big virtue for this one. And we don't really know what's going to happen this year. None of us really do. We all have like our ideas. And until those ideas are invalidated, there's really no point in me telling people like, all right, I think the bottom is in. I think that's very, the bottom calling to me in the space has just been crazy. That's the only thing I will say is don't marry these ideas where people are like bottom is in, bottom has to be in. Like make sure that you're doing your own research and using your own edge, maybe even where you're like, okay, this makes me think that the bottom could be in. Where am I wrong? Do that, write it down, and then stop listening to other people and learn. If you know what I mean? Like that's all you can really do. So that's all I'm doing is I'm just chilling and enjoying time and day trading along the way.
Ultimately, what you're talking about is the same thing that I was talking with Zombie is preparing, right? That's something that we are all trying to do. We're trying to prepare ourselves for our future in this uncertain economy. And it's scary, I won't lie, you know, with a young daughter and a family and multiple businesses, and they are all affected by what's happening at a high level. And so as I've gotten older and recognized how much, I always used to think it was such a weird thing to like hear my dad listen to, like, for example, like the CPI data. I'd be like, what the heck is this dork doing? Like, whatever, right? But now I recognize how much this affects my everyday life, right? So each and every one of you, if you're trying to get prepared and you're trying to look at that from a financial perspective, you need to be following these three gentlemen here. Be following Gareth, be following Magic, be following Zombie, and then as always, be following Debate Crypto, because we're trying to bring the heat each and every day. If you're looking to get more prepared on the prepper front, make sure to check out dangerclosealpha.com. We do have our mint live right now. They're 0.01 each. We are going to be giving away 5 Ethereum as well. We're going to give away a fire starter if we sell 50 of them today. So get involved with that. Well, gentlemen, I appreciate you for coming on. As always, you guys never fail to disappoint. It has been freaking fantastic. I think the overall information that we've received today is we've got 3 people on here that have been doing this a long time that think y'all should just be paying attention because things might just be looking to possibly turn back around. So follow everybody on here. Just remember, question everything, trust nothing. And until next time, hodl like it's hot. We will see you soon. Thanks again, gents.